Hi everyone, welcome to Trading Success Podcast with Cam Buchanan. What we're going to run through this week is we're going to look at the news ahead. We've got a big week in the markets in terms of financial news, so we'll go through those so that you can calendarize those particular dates. It's important to understand how news events can affect market behavior and movement, so it's good to be on top of these things. So that's why we like highlighting these particular events that are coming up. So we'll go through that, and also we'll look at the charts. We'll look at see what happened last week. What were some of the reactions to some of the news from last week? And so we'll look at the S&P 500, NASDAQ, Bitcoin, gold, oil, and we'll look at also some other markets as well that may be affected by some of the news this week. So let's get into the week ahead. So let's have a look at some of the main news announcements for this week, and just be mindful that we are authorized by Beyond Capital Asset Management for the purpose of futures trading education. Any advice we give is just general advice only. So past performance of any product is not and should not be taken as an indication of future performance. So just be mindful of that. Now look at some of the financial news to pay attention to. So we do have contract rollover on the US futures. So the S&P 500, NASDAQ futures should be rolling over today, which is Monday or Tuesday. So just watch the comparisons between the September contract and the December contract. The December contract, or the 12/24 contract, is the new contract we're rolling into. So Tuesday night, we have core retail sales and retail sales from August. We've also on Thursday morning, this is the big announcement that'll be coming out. We're likely going to see an interest rate cut of 0.25%, so 25 basis points. That's what's expected. If the FOMC want to cut more, then that would be very dovish. Now that also coincides with on Thursday night, 9 p.m. there's UK monetary policy as well. So they're going to be talking about their stance on interest rates, and then also US unemployment claims. But then the big one's on Friday, which is Friday morning, we've got FedEx earnings coming out as well. FedEx is typically a bellwether of the S&P 500 stock index. It's probably one of the most consistent performers. It's a very good indication of if there's one stock out of the entire S&P 500, out of those 500 stocks, the FedEx is one of those ones you want to follow. It's a good sign of how the economy is tracking. If FedEx are doing very well, that means then people are buying a lot of things online. There's a lot of products being delivered around the world, and it's a good sign for the US economy. Now, Friday at some time, we don't know, the Bank of Japan is going to be talking about their policy rate and obviously their stance on interest rates. Last month, we saw an increase in the rate from the Bank of Japan. That created a real interesting move in the markets. We had a crash and then we had a huge bounce. So it was a very interesting time. So just look out for that. That could have an effect, particularly if Japan increases their rates and becomes more hawkish, US becomes more dovish. There's going to be quite a separation. So, and we'll talk about some of the things to look for as well. Then you've got also in China at 11 a.m., they're talking about their interest rates as well. So their 1 and their 5-year loan prime rate. So the Chinese will be also talking about interest rates. So we've got a big week for monetary policy in some of the major countries, financial countries that we deal with. Now, some of the markets to watch. 6J, which is the yen futures. It's the yen versus the US dollar. We've noticed the yen has been appreciating since their last interest rate increase. We've seen the yen has been appreciating. So if you're interested in looking at a lively market as a backup currency market, look at the yen versus the US dollar. It's called the 6J. It's an interesting one to follow. We'll have a look when we get into the charts. Also, one to look for is gold, so GC, and also Bitcoin as well. So if the US Federal Reserve decides to cut their rates, now anything that's particularly, if we see the US dollar falling because of the rate cut, and we're seeing the US dollar at the moment is looking, it's in a consolidation at the moment, but we are expecting the US dollar to fall. It has been trading very high in the last 5 years or so. We are starting to see that dollar coming off. If the dollar comes off because of these interest rate cuts, you can expect that anything that's priced against the US dollar, any assets priced against the US dollar, should appreciate. So things like Bitcoin, gold, we should see an increase. So look out for that. Oil should potentially increase as well, even though I know oil's been traded using other currencies at the moment, particularly some of the Russia and China are trading in other currencies. Interesting to see how oil reacts to this decrease in the dollar price. It's going to be an interesting one to see how the traders look at oil. But oil has been, as we've seen last week, if you're following the podcast, oil has been selling off, and we did see a little bit of a sell-off last week as well that we were expecting could happen. Oil has found a bit of support, and at those levels we talked about, around that $66, $65 mark, and oil has bounced off that. But we'll see what the Federal Reserve interest rate announcement has an effect. We'll know at the end of this week, or by Thursday anyway. So let's have a look at some of the charts to see what's happening in the markets. So first of all, let's look at the S&P 500. So this is the 24-hour data. One thing I'll have a look here is the volumes as well. You can see volumes are still relatively low. We saw a little bit more buying coming in last week, but volumes are not extremely high, but they're starting to pick up. We saw at the start of this week, or last week, we talked about this balance, all right? This particular candle here was creating the balance. So Wednesday, we had a really interesting day where the market sold off on the open of the US cash market. Then we had this incredibly strong short covering rally. So things went short, and then market just went really strong. Now, this is a sign that there was some short covering, meaning some sellers having to get out of the market and cover themselves, so buying. And then the market went up and actually filled this imbalance zone here. So the market has finished that. Now, if we look at the US, just the US cash market data, so this is just trading US cash market hours, we can see here there's still a gap here that has not been filled. So I would expect this week that the market will try and fill this gap. And then I'd say the market will be fairly quiet until Thursday comes out. So I can see the market will be likely range bound. And maybe we might see a refill of, you can see here the market has created this imbalance zone here now as well. Like if we go back to the, so we've got that imbalance zone filled, but you can see how this market has created all these other imbalance zones here now. So I wouldn't be surprised if these, we might see it, we see the gap filled to the high side, which is, if we look at this chart here, it looks like the market might try and test 5650. That might get tested first, or the other way around. The market might want to go down and fill in these imbalance zones here and here. Right, you can see there's a double imbalance. And that when the market's filling those imbalance zones, it just means the market is balanced. It just means that the market is finding equilibrium, that no one's really winning. You can see how, we created all this imbalance to the upside on this particular, back in early August, and then the market has come down and it's filled in all those imbalance zones. So that just goes to show that the market is in balance. You can see that this imbalance zones got filled last week. So, price is pretty much balanced in equilibrium right now. So, so that's kind of where we're at on the S&P 500. I think it's going to be a fairly tight ranging kind of week. Not a lot of, I think the market's going to find some balance over the week. So, which means the market will probably trade between a couple of these major candles. But then after Thursday's news out of the US with the interest rates, I think the market will find a direction and move from there. But everything's looking fairly bullish in the markets. If you're looking at all the financial data, everything's looking like, forward profit margins on the S&P 500 companies are very strong. So I think, the market is gearing up for a bullish run, but we don't know when that's going to happen, of course. Probably things that may be expected coming in the later part of the year, coming into the election. And then after the election result comes out in November, then we'll probably see the market will rally from there once a new president is in place. So that's it on the S&P. NASDAQ is very similar. So if we look at the NASDAQ, you can see we've filled out this imbalance zone last week. Once again, on the Wednesday, S&P and NASDAQ are doing very similar things. If we look at just the US cash market data, you can see here we kind of fill the gap, but we haven't quite got there yet. Markets love filling these gaps. So I think the S&P and NASDAQ will be very correlated this week. Once again, we moved out of this imbalance zone. This balance range here. We filled this imbalance zone there. So these markets are very balanced. So not much to really report in terms of key levels there. But like I said, I think everything in the US indexes will react to the Federal Reserve announcements on Thursday morning. So let's have a look at Bitcoin. Bitcoin had a bit of a surge last week. So you can see Bitcoin is sort of balanced around the 50% of this last range here. If we look at the 4-hour time frame, it's probably a little bit more interesting to look at the 4-hour time frame. You can see the market is trying to swing up on the 4-hour time frame. We notice we have filled in this imbalance zone from here to here. If I just draw that in so you can get a grasp of that, we've kind of filled in that area there. We're holding long above this trend line, and we're holding above that 58,500 level, which seems to be support right now. So, yeah, once again, if the US dollar is something to watch at the moment, if the US dollar falls, we can say that these markets will increase. So keep an eye on that. Let's have a look at our next market here, which is gold. I'll look at the gold daily chart. You can see gold broke out of this little trend channel that we spoke about last week. It's broken the 2,600 mark, was that level of resistance that we were talking about. This is out of balance right now. So, I think, gold and silver have been really bullish. And I think last week, if you went long around these breakout levels, you would be sitting in a nice profit if you were trading those commodities. Oil, quick look at oil. Oil, you can see, is bearish. We are holding below the 50% of this range. We're struggling at the 38 Fibonacci level. We did find some support down at these liquidity zones here. So this is support around that $65, $66 mark is finding support. So if the market's going to continue if it's going to go up and you're looking for buying opportunities on oil, we want to see the market come back down, test these buy zones, and you want to see bigger traders coming in and buying, or bigger investors coming in buying off these lows and moving oil up. But at the moment, oil is looking a little bit sad, but it could be a good opportunity to buy down here. You want to see it retest 66 and then buy off that level. Now we're looking at some of those markets that we were, to look out for. One was the yen, Japanese yen. Why is Japanese yen interesting to look at? Well, you can see this has been the reaction after they've, the traders got into it with a sniff that, obviously the pound. There was obviously an idea that the yen was going to increase. All right, they were going to do increase interest rates on the yen because interest rates had been so low for so long. You can see, it had been sold off for so long yen, right? Now they increased the interest rates in August, and you can see the market started to rally. And this is where we are right now. So if they're expecting another increase of interest rates with the yen, we'll probably see that the yen will appreciate, particularly if the dollar or the interest rates in the US get cut and the dollar goes down, then we're going to see quite a strong separation. So there's going to be a lot of eyes on this yen USD trade. So the 6J, if you're looking at, is an interesting one to trade. You can see today, yen has had you can see, this is Monday's trading on the 5-minute time frame, very small time frame, but you can see these, the market rallies, has these accumulations, rallies, have these accumulations, and then has these spikes. So there's a lot of movement in the yen right now. You can see the volumes picking up. You're getting these spikes of volume. So, something to look out for. These longs on the yen be interesting to look at. Another one to look at is the interest rates. Interest rates, or the 10-year futures yield. Okay, so there's a market, which is a micro market called the 10-year interest rates. Okay, so at the moment, so this is basically based on what the rates are if you're buying US government bonds, or US, buying US debt. Basically, the government bonds is a very popular longer term trade, or an investment tool, right? Because it's a very solid return. But if you look here, you can see the fact that they're pricing in an interest rate cut. You can see that's coming into play right now. So you can see even on this market here, the 10-year interest rate is dropping down. All right, so that could be an interesting short opportunity coming into these interest rate announcements coming up on Thursday as well. So that's something to look at if you're interested in another market to look at. Maybe the 10-year interest rate. So it's the 10 YR as the ticker code on NinjaTrader, right? 10 YR, interesting trade or an interesting market to look at. So guys, that concludes this week's analysis of the markets, the week ahead. Safe trading. There's lots of news coming out, so just be mindful of, I think the big one is Thursday morning, the FOMC announcement. See if they do follow through on those interest rate cuts that Jerome Powell has been talking about. He last mentioned it at the recent Jackson Hole Symposium. All the indicators are on track that interest rate was going to be cut. And you can see in Europe during the week, Friday night, they cut the rates in the Eurozone as well. This ECB, European Central Bank, cut their rates as well. So, looks like everything's all in line for a rate cut in the US as well, just due to the, obviously globalization. What the West does, what one big power in the West does, another power will follow. So it seems like that's all looks like it's going to happen. So we'll see what happens. But once again, if you're trading on that particular morning, just be really careful. It's a very volatile time at the moment. There's a lot of, the markets are still very unsure of which direction they're going. So markets are very volatile, lots of movement, both up and down. So for day trading, it's exceptional right now. But the most important thing is really marking out where your support and resistance is. And particularly, we use a lot of the liquidity zones, and we're finding a lot of great opportunities around those liquidity zones with our IDTA indicators. So look, if you're interested to find out more about what we do, you can hit like and subscribe to our channel for more of these updates. And we do these weekly reports. So that's about it from us for this week, and look forward to seeing you next week. Bye for now.